You are listening to ChartingWealth.com's weekly review and forecast for the shortened trading week beginning Tuesday, the 19th of January, 2016. Where do we always start? Well, we start with the total market, not the Dow Jones, but all the stocks in the market. And that's best depicted, we feel, most easily by IYY, which is the iShares Dow Jones U.S. Total Market Index Fund, an exchange-traded fund that tracks the whole market. And we can see what's going on. Now, we always look, just those of you who are new, we look at three indexes. We look at the total market, the S&P 500, and the NASDAQ 100 technology stocks. We also look at gold. We look at the weekly chart on each of these very quickly, and then the daily chart as to what they did over the last week. This is different than our daily reviews where we look at a 2-day and a 4-hour chart each day of all three of these indexes in gold. Reason we once a week look at the total what's been going on a much bigger chart than our 2-day chart, well, 2.5 times actually, the weekly chart, is so that we get a feel for what's going on a bigger chart, which is important to do occasionally. We do that once a week. The other thing that's important to do is to look at what did affect the market news-wise after the week's over and what might be affecting it in the coming week, because we talk over and over again about how important it is for you to pay attention to the charts and not the noise. So when we look at what you might consider noise, we want to see if it was actually voices we should be listening to, or again, just a bunch of noise in the background that we really don't need to hear. We see that the market itself rotated over, going down on the 31st of December. As we got into the new year, we've had two big down weeks in the market ever since it opened. We were also playing around over the last the last couple of these broadcasts, just looking at things if we reverted back to a little bit smaller chart, the 4-day chart, or if we went to a bigger chart. These are charts that aren't typically looked at. We can even see the 6-day chart, which is a day, of course, bigger than a 5-day week, also showed us rotating over, going down. Now, when we convert back to our 1-day chart and we look at what happened throughout the course of the week, we can see that the week started on the 11th, Monday, and it was a big down day. The market digested a little bit on Tuesday and then rotated back over Wednesday, Thursday, and a big down day on Friday with the long Martin Luther King holiday coming up. Perhaps traders or investors were thinking, if there's more bad news over that 4-day period, why don't I get the hell out of the market and keep my money to myself before that 3-day weekend ends on Tuesday? May have been what people were thinking. Who knows? So let's go now back to our weekly chart. We're going to take a look at SPY. Now, SPY on the weekly chart, big down movements again started around the 31st if we revert back. And one reason we like to change time periods a little bit is just see what they tell us. The 4-day chart showed us a down market starting around the week ending well, again, it's not a full week because it's the 4-day chart, but around the 18th, between the 14th and the 18th of December. Excuse me. Now, if we look at our 6-day chart, we see, of course, about the same timeline right as the market's open with big down moves. Now, if we revert to our 1-hour, our daily chart, just to see how the week went, looked very similar to the IYY, the total market we saw earlier. Up day on Monday, sliding sideways a little bit up on Tuesday, and then on down. Now we're going to talk about something that might be coming and giving a bit of a relief to these down markets, and you can expect it here in the future. We're going to talk about that in just a minute, but right now, strong down moves still confirmed. We do see our derivative oscillator losing a little bit of its downward speed, but still strong down trends, MACD, and the signal line are not coming together at this point. Now, if we revert back to our weekly chart and we look at our last index, that is the Qs, QQQ, what does that represent? Well, that's the NASDAQ 100. Crossed over again strong at the end of the year on the 31st, well, actually on the 1st, on the 4th, coming into the new year. And what do we see if we look back again at the 4th? We see that crossover happened way back on the 18th. And if we look at our, as far as our timelines go, if we look at our 6-day chart, of course, we see it crossed over about the same time as the weekly. So let's revert now back to the daily chart. What do we see going on there? Not nearly as much of an up move on Tuesday. No, that would have been on, yes, on Tuesday for the NASDAQ 100. Basically a doji saying a lot of indecision on the 12th, and then the market, of course, rolled back over. The Qs was down, more than any of the other indexes, a full 3.1% on Friday. So lots and lots of down moves. So again, confirmed down moves on all of our indexes that we look at. Now let's go to our weekly chart and take a look at the one commodity we look at, gold. What do we see gold doing? Well, it crossed over, going up on the week ending the 8th, Friday the 8th, with all that down movement in the market, in the markets, stock markets in general, equity markets. We saw gold rebound, crossed over on the derivative oscillator, crossed over on the MACD, moving up strongly. Gold on Friday was up 1.03%. Now, if we look at gold on our daily chart, what do we see happening? Well, we see that gold actually throughout the course of the week had dropped. It crossed over on the charts. We see that it had been really strong the prior week on the 7th, started losing momentum on the 8th, which was the end of that prior week. A big doji showing a lot of indecision on the 11th, which was Monday of last week, and then down on Tuesday, sideways a little bit on Thursday, down big time on Thursday, sideways a little bit on Wednesday, down strong on Thursday, and then up on Friday to end the week 1.03% for that day. Now again, gold is still in a confirmed up move on the daily chart even after all of that down movement because of the big strong buildup at the beginning of the year. So continue to watch gold. It may not have run out of all of its steam going up yet, but it has fallen off considerably as to where it was. But again, keep in mind that gold is in a confirmed up move at this point. If we look at our 4-day chart, we can see it crossed over also around the same time period, and a bit of a spinning top in its chart right now. And on the 6-day chart, again, a lot of indecision in gold as it wrapped up that last 6-day period. So continue to pay attention. The markets are in a great deal of flux, but remember, markets themselves hard down. Now let's turn to some news before we wrap things up here. This is the one time, as we said, that we actually look at news. What happened over the last week? What really affected things? Well, China really they just continued to enter into the bear market. They saw 21% drops from their December highs. And again, we're only halfway through the first month of the year. Oil, raw materials continue to extend their declines. Why? Because of weak global demand. The Beige Book. Now, the Fed's, of course, behind the power curve. Generally modest to moderate growth with little wage or price pressure is what the Federal Beige Book is telling us. Now, again, that was from their prior meeting. ECB, that's the European Central Bank, their meeting showed hawk and doves equally divided. And what happened to U.S. retail sales in December? Well, they fell, and that continues to intensify slow growth fears. So the global markets continue to show broad retreats over the course of the last week, and we continue to see problems, volatility, dropping markets, and China. China again, 21% decline in December from their December highs. The Shanghai Composite Index officially in a bear market. That is always defined as when you have a reduction in prices of more than 20%. And get this, from its June peak, the index has fallen almost 50%. That is some crazy, crazy drops. What about oil? Well, it continues to drop, actually going below $30 in the last week. And the Federal Beige Book, like we talked about, they continue to say that growth remains modest to moderate across federal districts amid few signs of wage and price pressures, blah, 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 blah. ECB, like we said, they're concerned over December easing. And of course, as we start looking about what's going to happen in this next week, we have to pay attention to not so many things. It's really not a whole lot that's going to be coming out, but there is a signal here I want to particularly jump on for just a minute. But let's cover. When Tuesday, we're going to see a couple of things happen. The European Union's going to release its consumer price index. We're going to also see China's going to release its retail sales, industrial production, and GDP. And then on Wednesday, the U.S. consumer price data is going to be released. The ECB is also going to be meeting and holding a press conference on Thursday. That'll be interesting to see. That could have some effect on things. Need to pay attention to that. And flash global purchasing managers indices for January are going to be released on Friday, the 22nd. So pay attention to the ECB and also pay attention to what the European Union says about its consumer price index. Just watch those things, and consumer prices being released on Wednesday in the U.S. But what I really wanted to speak on was earnings season kicks off. Now, corporate earnings for the final quarter of 2015 began to be released over this past week. And though it's still early in the process, we need to continue to pay attention to what's going on and see what kind of earnings, because what could that do? Even with all this bad news everywhere else around the world, what if it gives us enough good news to get a pop-up in the indexes so that we cross over our 4-hour chart and actually find a good entry point? For those of you who want to follow that on a daily basis, let me tell you what to do. You need to go to chartingwealth.com. You need to sign up for our daily newsletter, which also includes this weekly review and forecast. We'll send you two things. Every day we'll send you our podcast, which is our daily review. We'll also send you a layout for our layout at freestockcharts.com. It's the Charting Wealth layout. So you'll get the same kind of setups that we have on our charts, including our moving linear regression lines, our MACD, how we have our Bollinger Bands, our price history set up, our derivative oscillator, our various moving and exponential averages, all those things. You'll also get a link to our 15-minute How to Read a Stock Chart video. Everything you need to start figuring out what's really going on. As we say, follow the charts, not the media noise. And if you want to know where things are going in the future, study the past. So that's what we can offer to you, and all of it at no charge. All you got to do, go to chartingwealth.com. Thank you so much for joining us. We hope that you have a great weekend trading. We'd love to hear from you. Follow us on Facebook, Twitter, Instagram, YouTube, you name it, we're there. chartingwealth.com.